We don't drive quite as much as you do there in the US, but it still is already being felt. We see it at the pump. This is the Easter holidays here. Families are taking road trips. Families have had flights cancelled. They might have gone to the Middle East. And we know that price pressure is continuing. The recent inflation print in Europe was 2.5%. So low by US standards, low by UK standards, but still notably higher than where it had been. So there is some real trepidation regarding more austerity down the line.
Aoifinn, let's step back a little bit here from the uncertainties of the Iran war here. What are the conversations you're having with your clients about how to maybe try to look past or look through some of this uncertainty? What are the conversations like about where to invest these days?
Well, it's really interesting. Most clients are well accustomed now to market volatility. We know that equity markets have become more volatile. They know to stay the course, to not have knee-jerk reactions. However, many are just moving on from a straightforward balanced portfolio approach. This has been the worst month for a balanced portfolio since 2022. And we remember what a horror that was in terms of bonds and equities falling.
Right.
So there is some nervousness regarding the bond side not doing what it should. And equally, in terms of diversifiers, yes, our clients have been dipping their toe in the water of diversifiers like real assets and private assets, but that's very much at the margin, not enough to move the needle in a portfolio. So they are watching carefully for news around private credit, for example, but ultimately staying the course. When they have cash, that's where they're keeping it right now. They're not too desperate to get money to work at the moment.
We had certainly in 2025, while the U.S. equity markets performed well, many markets outside of the U.S. performed even better. How do you see that in 2026, again, given the geopolitical uncertainty that's out there?
Well, we do see that as being part of the rotation. That did seem to be reversing slightly as America does seem to have the upper hand, at least currently. And when we look at the dollar, it's being expressed in that. So at Moneta, we've always had a very international, global, diversified approach. It has not always been easy to hold that line, particularly when we had that sustained period of underperformance by Asia and Europe. We know that Asia was very much becoming the tech trade and that Europe was starting to be part of that rotation trade, particularly around defense stocks, financials. Now, with the clear uncertainty that is set with the price rises we've mentioned, led to uncharted territory, we don't know whether that rotation will have much legs or whether there will just be a widespread risk-induced sell-off.
Give us the Aoifinn Devitt x-axis right now on demand destruction. Are we on the edge of April?
We are tomorrow,
like Aoifinn doesn't know
sure.
this, but I don't think the Red Sox are going to make it to April. But that's a separate story. Aoifinn Devitt, we're on the edge of April. When does the demand destruction click in across this transatlantic?
Well, it's interesting. We've spoken a lot about the K-shaped economy in the US, and I'd say there is a K-shaped economy in Europe and outside the US as well. We know that consumers at the low end of the spectrum are really hurting. They don't earn as much. They have higher energy costs, and their inflation has been sustained. So we don't have a particular robust consumer, but then they do have a larger social safety net outside the US, and they're used to austerity, which they've had for some years. We see countries like Spain having strong economic growth. So whether there'll be much spending, I say the consumer has not been as drunk on credit or on spending as perhaps we've seen elsewhere. So I don't see that the consumer has been very lofty for long at all outside the US. So arguably they haven't got as far to fall.
What are you doing with cash today? We got to go, Aoifinn, to the breaking news here from our Eastern Mediterranean team. But what do you do with cash here? Do you just sit on the sidelines?
You sit here for now because with government bond yields where they are, you're going to still get a decent return. And while inflation is low, in real terms, that's still meaningful.